What are the actual true closing costs on an FHA insured reverse mortgage? That's what we're going to talk about on today's video, so stay tuned. But not only that, I'm also going to talk about the formulas that we use to calculate these closing costs so you can evaluate for yourself if the loan officer you're talking to is giving you the straight scoop or not. So stay tuned. By the way, if you like the content on this video, please click the subscribe button below and you can get more content just like this. Also, give me a thumbs up if you like it as well. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage here in Denver, and my contact information is below. I've been doing reverse mortgage loans specifically since January of 2003. So let's go ahead and dig in now. There's three categories of closing costs. Number one is the mortgage insurance. And that's on all FHA loans have mortgage insurance. The only difference is how it's calculated. And we're going to get into that in just a minute. Number two is the origination fee. And number three is what we call the other closing costs. So let's talk about the FHA insurance. Okay. Now there's whole reasons why. You may ask, well, why do I need mortgage insurance? All FHA loans have mortgage insurance. And I'll answer that question in another video at another time. Just make sure you hit the subscribe button. But the mortgage insurance is calculated for reverse mortgages by taking the value of the home up to what we call the maximum claim amount, which is $1,089,300. If you've got a home that's worth more than that, we're going to base the amount we can loan on as if your home were only worth $1,089,300. But let's scale that back a little bit and calculate it based on a $500,000 home. If you have a $500,000 home and the initial mortgage insurance premium is 2% of the value of the home, that's $10,000. But let's back up just a minute, because I want to touch on the fact that, number one, you're not actually paying any of these costs. I don't charge anything up front, out of pocket. You don't pay for the appraisal, the application fee, none of that stuff up front, okay? But you are charged these fees. They get added to your loan. However, the difference between a conventional mortgage closing cost and reverse mortgage closing cost is that it's not factored into a monthly payment. If you're charged $10,000 or $15,000 in closing costs on a conventional mortgage, well, that gets added to your loan balance, which increases your monthly payment. There's no monthly payment with reverse mortgages. All you have to do to maintain your reverse mortgage is you have to live there as your primary residence, you have to pay your property taxes, pay your homeowner's insurance, you have to maintain the home, and keep your name on title. As long as you do those 5 things, you can never ever be kicked out of the house. The loan will never come due if you live there, and unless you live to be 150. That's the only caveat, okay? So let's keep that in mind. So that's the first cost. It is a cost. You're being charged it. You're not paying it out of pocket. The second cost you're charged is the origination fee. And FHA has a formula for that as well, too. The formula is 2% of the value of your home on the first $200,000 in value, and then 1% thereafter on the rest of the value of the home, up to a total cost of $6,000. There's also a minimum charge that we're allowed to charge. Let's say your home is only worth $150,000. We could charge you $2,500. That's the minimum in situations where the values are worth less than the $200,000. But that's unlikely to happen here in Colorado. So let's take that $500,000 value again. The first $200,000 in value is calculated at 2%. That's $4,000 that you're going to be charged. If your home is only worth $200,000, the origination fee could be $4,000. But then we charge $1,000 for every $100,000 thereafter. If you've got a $500,000 home and the first $200,000 we're charging you $4,000, the other $300,000 is another $3,000. Well, if you add those two together, that equals $7,000. That's above the cap, though, that's allowed. So the maximum we could charge is $6,000. That's the worst case scenario in origination fee. You need to be aware of this one thing, though, real quick. Origination fees are negotiable, okay? Don't ever let a loan officer tell you they're not. If they tell you they're not negotiable, it's because Their employer probably told them, we're not negotiating on these origination fees. Well, come to me. Call me if they're not willing to negotiate. Call me anyway. I recommend everybody get a second or third opinion as well too. Shop around. Do your homework. So that's a second fee, is the origination fee. The third fee is all the other costs. Those are the appraisal, the title insurance, the closing fee, all that stuff that you'd have on a normal mortgage loan. Typically, in Colorado, now be aware that those fees are higher if you have a higher valued home. If your home is worth $750,000, $800,000, $900,000 or $1 million, the appraisal costs more, the title insurance costs more. If you're in a rural area, the appraisal could cost more. Or if you have a home up in the mountains, an appraisal could cost more too. So I range those. Typically, most customers in a metropolitan area are going to run around $2,400 for those costs, but they could run as high as $3,200 or $3,300 if we need a survey or other situations like that. It just all depends. But typically in that $2,400 to $3,200. So let's total these up. For a $500,000 home, we've got $10,000 that you're going to be charged in mortgage insurance. And let's say if you're calling me, and it depends on how much you're taking out of the loan too. If you own your home free and clear, we have to charge a bigger origination fee than we would if you were taking out $250,000 to pay off your mortgage or something like that. So let's just say $3,000 for origination fee. And then all the other costs are about $2,500. We'll just round those off. So we total all those together, and that's about $15,500 is a good ballpark figure for you if you've got a $500,000 home. Now you can calculate that if you think your home's only worth $400 or if you think it's worth $700, you can calculate those to figure it out yourself. So hopefully that is helpful for you and answered your question of what the closing costs are. But by far, the benefits way outweigh the negatives on reverse mortgages. You want to make sure that this is right for you, that you're going to live there, you're planning to stay in the home, and there's a lot of different factors on whether or not a reverse mortgage is right for you. But feel free to call me. I would love to talk with you one-on-one, and you could decide. I'll give you the information so you can make an informed decision if a reverse mortgage is right for you. Thanks so much for taking the time to watch this video.